Mandy, that kind of stood out to me is this kind of idea that we are having more volatility events that seemingly come out of nowhere or seem to be very idiosyncratic. And what do you think is driving that? Is that more the preponderance on the buy side of volatility targeting funds either implicitly or explicitly, or does it have more to do with how the supply side has changed?
I think, both targeting funds on the margin can contribute, but I think what, especially if you look at what happened in February, I think the big story that's maybe not told as much is the liquidity side, right? So people talk about February as a bull event. I think of it as primarily a liquidity event. Bid-ask spread blew out to levels that we hadn't seen since 2008. So people talk about VIX went to 30. Well, the decline in liquidity in February was reminiscent of 2008, and that is what's scaring me.
Do you think the VIX option flow of the last week or so has been a little bit more encouraging for you?
Yes, we think it's actually fairly encouraging. So vol all went higher, but the flows predominantly we've seen people monetizing existing asset calls and or buying puts. Both trades basically saying that the worst is over and investor station and volatility.
Do you blame the Fed for any of this, Kathleen?
I think the Fed is doing a great job.
You do?
They're in a hard place. They need to get the curve back to normal.
Okay. All right, so I don't know if you guys watch this kind of stuff. You should. Not so much to try to get a feel for what the market will do, because the bottom line is none of these people know where the market's going, right? None. They don't know where it's going the next minute. They don't know where it's going to be on December 31. They don't know where it's going to be this time next year, right? That's the bottom line. The reason you may want to watch is you're trying to pick up what do they tend to talk about the most? Are they talking about interest rates? Are they talking about the bond market, the stock market, a particular sector, a particular industry? That, to me, is telling you more than any one opinion that you're hearing, all right? And the other thing to keep in mind, everything you're hearing there is just that, right? It's an opinion, and for the most part, just about everybody you're hearing and reading there and seeing has an agenda, right? If they work on Wall Street, they want you to deal with their firm, and so this is why you're trying to get a grip on what you're hearing and reading and looking at your charts. You're looking at the charts vis-a-vis what you hear the gurus talking about, all right? And so bottom line is you still need to make your decision. It's your money. If you don't want to go through all of that homework, all of that work, then basically, you're going to turn your money over to a broker, right? I mean, that's what they're for, right? And you let them make the decisions. If you're here as a trader, again, as I pointed out in the email this morning, we're not concerned so much about strategy, and we know the market goes up and down, and of course that's what we want. We want the up and down, right? That's what we follow, price, right? Hold on now. I guess as long as we're here, let me quickly go to, let me get rid of this, get rid of that. Quickly go to page 1. And in page 1, again, if you saw my email this morning, I gave you my rationale for why I thought the market was acting a little jittery this morning. And after a monster day like yesterday, it does make sense. I also pointed out the drop in IBM accounted for as much as 38 points of the Dow. So we'll see here. Hold on. Talking about that V-shaped recovery again, I pointed that out over the week, not over the weekend, but the other day in the trading room. It would be nice to have a V-shaped recovery on this. I don't know if we're going to get it, but that's what the market thought starting yesterday. We'll see if that pans out. again, what's important is it's not as we open, it's how we close, as usual. Let's see, 1 second. Futures, again, Dow futures now down 117. This Netflix, and in case you're interested in Netflix, all right, I don't know if you, whatever you may know about Netflix or not know, you should try to make yourself aware of as much as you can about it. But you know, the stock has been just a monster to the upside, and along comes this particular quarter. And this particular quarter, in the For What It's Worth department, if you haven't seen this yet, you may want to come here. Again, I just don't know enough about the fundamentals of Netflix to pass judgment on this, but I am pointing out, makes for an interesting reading here. And so that article is on Zero Hedge, and I'm putting it in your chat. So in your dialog box here for GoToMeeting, you should see that link. You can read that article yourself. All right. So the point I was trying to make in the email this morning had to do with, look, we know we've got negative events going on in the background. The question is, are those negatives in the background enough to establish trend and enough to basically shake out the market? And here's, again, look, housing starts, permits drop. The earlier data point that came out was about the mortgage market, the lowest in what it was, 20 years or whatever it was. So this, we knew this was happening, and one reason we definitely knew that this was happening. 1 second. Sorry about that. All right. Okay. 1 second. All right. Now I've lost. Hold on. Try this one. Again, these are various industries here. And the one I'm interested in, ITB, I think this is the one right here. Yeah, these are the home builders, right? And I pointed out in the email this morning, I pointed this out here in the past couple of weeks, put those two together, and then this morning we find out the mortgage applications are the lowest in been in 20 years. We also note just a moment ago housing starts and permits drop in September. Now, again, there may be reasons for this, and a lot of this, as far as the starts and permits, that pretty much can become a regional thing. It can be a weather-related thing. So, what's really important when you look at this, make sure you can identify trend, right? And trend in for this kind of data, you're talking at least 3 to 4 months of trend. What is that trend, right? And what is the rest of the market doing about it? All right. Meanwhile, hold on. So in spite of, again, that Netflix thing, I'm just pointing out, just keep an eye on it. Maybe it's, we'll see. Hold on. Yeah, this is another one here, semiconductor stocks. If you're interested in semiconductors, you're going to be interested in the SMH and the SMH. One second. Well, SMH. Ah, shoot. I cannot find the ones I'm looking for when I want them, of course. Look, I just pointed out the builders. Here's the banks. Here's the financials. Again, these things are not going up, are they? They're trending down. That's the observable trend. Now, the market would have to do some sort of rally based, for whatever reason. It just needs to find a reason. The earnings news, they're just going to keep talking that up because it is significant, it is important. The question then becomes, is it significant enough? Are these earnings results and outlooks literally going to be enough to take us to new highs, literally new highs? So we would have to climb back to where we were a week and a half, 2 weeks ago, right? And then start moving up from there. That would be a new leg up if that were to happen. I contend that, again, we've got the elections in the way in between now and then. So nothing to worry about. Just trade what's in front of you. Trade what you see. Hold on here. As opposed to trading what you think will happen, okay? That's not what we're here. We're not trying to second guess what the, what the economy is going to do or anything like that. The only thing we're here for is to identify a trend in whatever. Doesn't matter what. Identify a trend, latch onto it and ride it up or down. And 1 second here. Finish this page 1. So look, you've got Home Depot and IBM showing weakness for the Dow, all right? And again, put that in perspective. That's 2 stocks, right? 2 out of the 30 are down, and they're big enough, those companies are big enough that they do have an impact. The question is, will that kind of an impact carry over into the S&P 500? The S&P 500, of course, has, 470 more stocks than the Dow 30. So which one do you think is more important as an ultimate test? So it's the one you watch most of the time is always going to be the S&P. 1 second. The one you trade is the SPY. Okay? So the S&P chart looks like this. Not identical, but it looks somewhat like this. And so here, at this point, you could see, 1 second here. Where's here? We've got room to run, it looks like, on the SPY, at least on the 30-minute chart. Where are we? We're at 280.26 in the pre-market, 280.26, so we're almost at where we closed. That's a good thing. Keep in mind, the IBM and Home Depot are inside the SPY, but again, the SPY, unlike the Dow, is 500 stocks, and so you have less of an impact, even if one big name stock goes down, right? Sort of like the effects of a mutual fund, right? Meanwhile, okay, I said I was going to show this. Let's see, this is going to be, let's see, who's here? This is for Kelly. I guess Kelly will show up either in a bit or later on. She can watch the video, but here's what you're talking about here, Kelly. I'm guessing, here you go. Kelly's just arrived. Okay, hold on. Okay, so I was just starting to show this, Kelly. So here, this is this portion is for you. 1 second here. And I'm assuming you were talking about these lines here, the data lines, okay? These long green things. And I pointed out to you, I said to you, you're going to go in order to put this on your chart, on your grid. Excuse me. You're going to come up here to studies. You're going to go down here, add a study. You're going to go all the way down to profiles, and then you're going to do volume profile. Okay? And so when you do that, you probably did not get what you see here. What you got, I'll show you in a minute. And watch what I'm doing, by the way. I'm just right-click on top of the indicator I want to work with. In this case, this should come up. Also, in this case, it did not come up, but it should, nonetheless. I'll just go to studies anyway. Edit. So this volume profile, okay, I could change this, and this is probably what you've got. Unless you changed it, you probably got something like this. 1 second. Hold on. Back to studies, edit. Profile, click. All right. So when you first pulled it up, you probably got something like this, and everything is on the right-hand side of your price action. Okay. And what you want, all right, what you want to do here is, as I'm pointing out now, you're going to come back in here. 1 second. So let's try this again. I'm going to right-click anywhere inside the green there. And either way, I'm going to go down to studies. I'm going to go down to edit. Okay. And what I want to edit, of course, is my volume profile. Click. Click. And what I want to change is what's called the on expansion. Pretty sure that's the one that will change that. On expansion, you're going to change, yeah, there you go. You change where it says on expansion to no. Did you get that? Right. And when you do that, then the minute all of a sudden, this is what it looks like. Right. And so again, it's showing you, you've got major support here at 271.44. You've got, we just broke above, this is pretty big volume here. This is a good area that we just broke through here. You could see it, 1 second. Damn it. Excuse my French. So that was pretty important. On a day like this, I can tell you one thing to expect. Keep in mind, you know, we do have a nervous market, but what I would point out to you is this is a long candle, right? On a long candle day, the very next day, right, you can obviously easily see you're probably going to get some profit taking. Why? Well, because you had a pretty big day, right? And nobody knows, you know, traders anyway, short-term memories that traders have. Right, this is basically what they see. As you'll recall here yesterday, I made a big thing about the symmetrical. That symmetrical, by the way, is no longer gone. I mean, it's no longer there. Right? This is basically what we have at this point. The ascending triangle won out. Right? Now, as far as what happens on a day like this, again, has anything changed has anything changed overnight that would jeopardize or reverse this market? From what I can tell here this morning, no. There's profit taking, yes, but is anything out there significant enough to literally turn this market upside down? As far as I can see, I say no. Fibonacci from yesterday's action suggest, let's see, let's go back. Let's just look, 5 minutes. Suggest we could have a pullback this morning. We could have a pullback to roughly this 50% mark, 278.50. Is that possible? Yes, it is. Why would the Fibonacci say it would stop there? Well, for one thing, you could see here you've got a previous, here's a resistance level. Resistance in the past becomes what? Support in the future. If we do come down here to this level, look for this price level to be where buyers might want to come back in. Let me try to clean that up a little bit more. 1 second. Jeez. All right. In the scheme of things, we are in open blue sky territory here. We can, if we can get the right news, we can make a quick move up. Why? Well, because look, we've got all this open space here. Right? Now you need news to make that happen. It's not just going to go up without news. All right, you need some catalyst to move this thing one way or the other. But the point is, any good news, which, by the way, for today probably is going to be limited to 2 o'clock when the Fed announces their minutes. Okay. So that would be one thing you're definitely going to be watching. Let me get rid of the. All right, so this is what we look like on 30-minute chart. and 30-minute chart, but this is what we look like on one day. So look, this is what I'm trying to point out here. Price action could come down, come down, come down. It would be very normal, very typical. And this is where you don't panic, okay? Look, the market went out of its way to push us higher yesterday and break out, all right? I mean, that was a powerful move, right? And all for the right reasons, that is to say, earnings, right? You could have, as I just pointed out, you could have a pullback right now, today, that will pull this market down to this 278.98 level. Look, that's a 38% pullback. 38% pullback of just yesterday's action, And I'm saying to you, that is normal. Okay? A 50% pullback would still be normal depending on what, why it's pulling back. But basically, what you're looking for here is you're basically hoping that the market does not go below the 50% mark of this long candle. A long candle is one of those candles that is like, you can see, they're pretty easy to spot. This is a long candle, right? They're candles where the range, right, is an extreme relative to the previous few days. Right? So you can see here, that's pretty extreme, that's pretty extreme. This is extreme, again, relative to the past few days. That range, when you do see a wide range action, you definitely are also looking for volume to support it. So on the sell side, when the price was coming down, you had plenty of volume agreeing with you, hey, we should be out of stocks. Today or yesterday, we had a nice range of price action. We don't have an overwhelming, this volume does not outpace the selling volume on the way down. So this market is tenuous, right? But what we consider here is trend. So what's the trend? The trend is still, here's a low, we pivoted off the low, confirmation of that pivot. This is where all of a sudden we, as of yesterday, remember, we had the symmetrical or potential symmetrical. The potential symmetrical did not work out. It broke out. Right? So at this point, the burden of proof is still on the bulls. Keep that in mind, though. Okay, the burden of proof is still on the bulls. Meanwhile, hold on. Okay, clean this up. Let's see. Okay, click. All right. So we're going to watch the same thing as usual. See how boring trading can be. I mean, this is, why do I do this teaching thing and have been doing it for years and years? Because if I was sitting here on my own every day watching the same boring stocks and doing the same thing, I mean, here's one big motivation I've always had in coaching has been that coaching just sharpened my game, right? And what I found is that's what it takes. You do have to get intensely involved if you're literally want to, keep trading for a long time. You want to stay in the game. You want to learn. Meanwhile, let's take a look. 1 second. Our VIX action is below 18. We're sitting at 1765. That's still bearish, by the way, but it's lower than it was, and that's all we need to know. we are going to have some action at exactly 2 o'clock. You are going to see some action in this 10-year bond, as well as this, the 10-year yield on that bond. These two go together. Again, this is the price of the bond, the note rather. Right? This is the yield. So here on the note, you're paying $1,118 per $1,000 certificate, and here's the yield. And the way you read that yield, keep this in mind, your yield is not 31%. The way you read this is move that decimal point. Your yield is 3.158. 3.15. That's the yield on your 10-year bond. This is what's affecting your mortgage market. That's why the market is so concerned about these rising rates. That's partially what we saw. In the news, in the negative news on housing this morning. Hold on. Well, I just got through saying this, didn't I? Mortgage applications down. This is a big thing, and the reason it's a big thing is because housing is roughly 18–20% of the economy. Right? So yeah, it's a big thing. I would suggest this is just an opinion, but I think in the future, in the near future, before the quarter ends, right, you're going to start seeing an uplift in those numbers. Why? Coming out of all the rebuilding that has to be done in the Carolinas, as well as Hurricane Florence. Right? That's a lot of damage there. Katrina, as bad as it was so significant, but it also was so large that it actually impacted the economy. And you saw after Hurricane Katrina, the market had dropped, went down for maybe 3 or 4 days, and then came back up sharply because all of a sudden Wall Street said, "Hey, wait a minute." People are going to be rebuilding, everybody, and so that rebuilding affects all these different economies. I'm just pointing out, in my basic thinking about what's going on in the market, I do expect that to be to come into play. You don't see any headlines about it right now, but that is still what I expect to see at some point. The fly in the ointment, of course, is the elections. All right. If the House turns and all of a sudden it looks like the government is not going to be able to function, they won't even be able to function as a result of if they lose. Well, if the power shifts, you can expect. I would think that would be a catalyst to slow things down. We'll see. Hold on. Affordable prices. Okay, so look, see the commentary here? Right? These minutes could cause a stir if they convey a resolute stance to maintain a tightening bias. This is what you have to appreciate about the minutes. This meeting was held 2 weeks ago, so we're now getting the minutes from that meeting. All right. If 2 weeks ago the FOMC felt that the economy is strong enough that we're going to keep raising rates, and that's what they said, right? Then when we get the details of those minutes, we're going to find out did they mean it, or were they just were they bluffing? And so my point being, if the minutes give the market something to grab onto that, hey, it's possible they're not going to raise rates in December because of this slowing of all this data, the housing starts themselves, the bank loans going down, all of that stuff, right? Then if in the minutes they say, the Fed were to say something like, hey, listen, we don't have to really raise rates in December. We can always delay that last one, the one we were going to do in December. We could delay that one until maybe January. If they did something like that, right, the market at that point, and this is important, the market at that point has to determine, is that the Fed trying to tell us that the economy is slowing down and therefore they're going to goose the market back up? Or does the market look at that and say, hey, lower rates forever, and react accordingly? That's going to be what you need to focus on going forward. Meanwhile, having said all of that, right, and realizing, of course, most of what I just ran through is nothing more than my opinion, right, and the only reason we're really here is to try to trade a particular stock or take a particular trade. Let me go back to the SPY for a minute. SPY. The one thing I would point out, earnings season has started, and at this point, the market likes what it hears, right? It likes what it thinks it sees. The outlooks that each company is giving us is becoming very important, right? But generally speaking, the market has a sense that earnings will continue to support current price levels. Once that starts, once the market generally has a sense that it's going to have a good earnings season, right, the market will just keep moving in the direction it's moving in. That is to say, at this point, the market is saying, let's get bullish. Right? Dilly-dilly. Hold on. There are very few times, unless it's some major event, negative event, where the market will, in the middle of earnings season, just change direction. Right? Once it gets the whiff of strong earnings and strong outlooks, all right, it just keeps pushing. That's what the market's job is. If, say, the balance of this week, all of a sudden the earnings start coming in really horrible, well, it's still very early in the process. Right? I mean, it's possible that we could turn on the market and all of a sudden we start working our way down. Remember, in the background, we've got this, the housing situation, rising rates. I mean, that's all there signaling, be cautious, or at least make yourself aware that that is going on out there. The market, I think anyway, is tenuous enough that if it can get a headline, a big bullish headline, right, it'll move to the upside. If it gets a big bearish headline, it'll pop to the low side. One thing to keep in mind here, let me pull up the SPY for a minute. Or maybe not. We are looking at my big picture chart, 9 days. Okay. So again, what you're seeing here on the right side reflects 1, 2, 3, 4, 5, 6, 7, 8, 9. What you're seeing here, right, is this. And as you look at this, what do you see? On stochastic, Isn't this what we want to see? We're turning up. At least on the 9-day. Look, this one here hasn't made the turn just yet, but it's trying. We'll look at these individually. In looking at any trade, again, what we're really looking for, it doesn't matter the stock, but what we're looking for, as always, is room to run, right? And again, look, here on the SPY, depending on my time perspective, all right? I know you get tired of me saying that time perspective thing, but it is incredibly important, right? On the way up, price action on the way up here, right? It's already above, or it's at, I should say more specifically, it's probably at right now, at a resistance level. It's got to get above here. We've got to get a closing price action above this, whatever price level that is right there. Can't get it. Yeah, we got to get above 280.51. Would be a good number to work with. 280.51. On the way up, you would expect this to be some sort of resistance. If we can get through that, you can see how quickly we're going to go from here to here, from here to this level, which is roughly what? How many points is that? So if we can get up there, that's 1.5 points. At this point, on this chart anyway, this is what we're seeing. Keeping in mind, even though I'm speaking of the SPY here, all right, if you've got a chart that looks identical or similar to this, it won't be identical, but it looks similar to this, you're still going to read it pretty much the way I'm reading this right now. Why did I choose this price here? That's my previous high. In order for me to get to where I am today, I had to bounce off this low. This low comes off of this previous high. So, do we have room to run? Let's see, in 3 weeks' time, I mean, we could get up here in 3 weeks' time. It just depends on the news. 1 second. But suppose we're trading another time period. And you understand what I mean by trading time periods, right? Here we're looking at the SPY chart. And suppose I do know my trend, my chart patterns. And again, what is my trend here on the 5-minute chart, 5-day, 5-minute chart? Trend is up, right? Trend is up, everybody agrees, right? So if on the 5-minute chart, I were to see one of those notable bullish chart patterns, right, that I know so well, right? You know your bullish patterns, you know your bearish patterns, right? And so here I've got a trend that, and all of a sudden, let's say I don't really see one here. I mean, there's nothing magical about what we're seeing here. But let's say, again, I had an ascending triangle here, or I had any of those typical bullish patterns. Let's see if we can find them here. If you ever have an issue with that, you might try here. You can come under here. On the profit chart, look under patterns. See it right here? Top patterns, find patterns. I don't recommend this. I mean, it won't hurt you to work with this. But what you'll notice is once you study your patterns and know your patterns, all right, you'll find you can argue with some of their findings here. But better than nothing. Find patterns, and out of the patterns, we can pick whatever we want. Again, I don't recommend. I'm not a big fan of using this. You're going to be much better off learning them the hard way, the old-fashioned way, if you will. Study. Go to stocktrust.com. Learn, or what's the other one I use? Levitt Brothers, and just study the heck out of your patterns. 1 second. All right, so 9:51. Let's see, what are we doing here at 9:51? Click. We are looking for the drivers of the day. And first of all, is there any news? Come on. Is there any specific news due at 10 o'clock here? Got crude here at 10:30. That's about it. So 2 o'clock, nothing changes until 2 o'clock. You can see here, or sense it anyway, a little bit. Maybe the market is a little tenuous. On the one hand, it's had a good day yesterday, major day, and you could see here the behavior right now. It's not too motivated to give back what it just made, right? If all of a sudden this market just dropped like a rock and gave everything back from yesterday, okay, then you could say the market's got an issue, right? But right now they look tenuous. They're not looking to sell. They're certainly not overly aggressive to sell into this market. They're going to wait till 2 o'clock. The closer we get to 2 o'clock, maybe we would dip to this level. Here's a reasonably level that could hold itself here as support. Let me clean that up for 1 minute. Try this. Look, I've just spent some time earlier. I was just pointing out any pullback from yesterday's action. All right, here's that 50% line. If we do sell off going into that 2 o'clock hour, we come down here, the minutes come out, and there's nothing in the minutes that scares this market, they're going to push this thing back up. And that would be, the level that it would do it from. That's the point I'm trying to make. One other thing, I guess, to consider here. One second. That's a weekly chart you're looking at here, by the way, on the SPY. All right. Another thing I should say, you're going to want to pay attention to today. Pay attention to the volume today relative to its range. So what could happen today? Maybe we don't move at all from here. The news comes out at 2 o'clock and basically the market doesn't do anything. It just stays pretty much right where we are right now. This is still bullish. you would have to get closing price action under that 50% mark of yesterday's candle, which is basically, again, under that 50% mark. So we'd have to close down here, 278, close down there. We can go down here in the middle of the day. We more than likely will go down here. But closing down there is going to be something else. One second. $278.36 is that 50% mark. Watch your trend, and again, keeping in mind, this is a good example, even though these are 15-minute candles. So the market had a big scare, right? And then there's a reason why the market did not go any lower than where it did, okay? On the way back up, everybody sees this, right? And they're afraid, well, it's going to go back down, it's going to go back down. Well, maybe it will, maybe it won't. You don't know that. And as a result, since you don't know that, maybe you just better stay with the trend. Because why? What does the market do? It climbs a wall of worry. It knows that you're worried about getting into this market, right? When I say it knows, I mean non-professional traders know that, professional traders know that non-professionals are afraid of getting into this market. Why? Because it's the wall of worry right in front of it all the time. But in the meantime, what happens? At some point, again, barring a headline, but at some point, the market works its way back to where it was. Right? And what does mom and pop do? They missed all of this. They get in over here, and at a resistance level, the market says, oh, maybe we should pull back a little bit, and it pulls back down. Mom and pop got in over here. As far as they're concerned, they just got screwed again, and they get out on the way back down. In other words, they're not trading, they're trying to invest in a trading world, and this is a trading market, not, in my opinion, I should say. This is a trading market, not an investing market. If you believe that in the first quarter of next year is going to be weak, right, you trade your way into going into the first quarter, and maybe going into the first quarter, if various gurus are correct, then we should see some weakness going into the first quarter, maybe a recession going into next year. It won't be as a result of, well, it'll be because the business cycle is old. It is old, and the longer it goes, the weaker things, the cracks start showing, and that's what I think is starting to happen. But again, we're interested in trading what is happening. So I'm noticing here, pull back, 9:59 going into 10 o'clock. There is no news due at 10 o'clock, right? Just oil. One second. From a timing perspective, again, you've got that 10 o'clock news, you've got, or usually you'll have a 10 o'clock data point, and then you'll have the 10:30 reversal period. All right, let's see here. Anything causing this? Let's see. Financials helping us or hurting us? Hold on. I find this interesting here. Look at the sell-off here is in the top left here, if you're tracking me here. You see the Dow, it just took a hit, I don't know, for whatever reason. I mean, they all moved down. The VIX moved up. But the VIX moved up, and the question is why? The dollar did not spike up. The downward dollar is sort of positive for stocks. It's not because of the bond market. The bond market here didn't do much of anything. It's not about the bank stocks themselves. Look, the banks, you know, they didn't do anything in that. When did this change? Everything changed. 954, 958, 958. I'm guessing here that some big name stock took a hit at 958. I don't know. But again, what I'm trying to discern is if that pop in the VIX is not caused by rising rates, it's not caused by a falling dollar, what's causing it? Is it fear? Are they already trying to build in fear leading into 2 o'clock? That could be too. And if that bothers you, then you sit aside, you know, stand aside until 2 o'clock. Do nothing until that 2 o'clock news comes out, and then trade the way the market wants to move at that point. And by the way, at 2 o'clock, basically you probably want to wait about 15 minutes. The news will come out at 2, let the market do its little volatility dance from 2 to 2:15, and then consider what you might want to do. 1 second here. Oh, so look, we're on our way to that 50% mark. Let's see if that's the way it works out. Look, the first stop we make at the 38% mark. Look, see it here? Let's keep an eye on volume as well. I'm going to move to a different chart here for a second. Come on. Remember what I pointed out when we first started here today? I pointed out that article on Netflix. I don't know if that's what's having the impact here, but that Netflix looked a little ugly. All right, meanwhile, there's something else to watch again now. What I don't have a good feel for is how many of you guys are actually trying to day trade and how many of you are trying to swing trade, and then on the other hand, how many of you are actually trading and how many of you are just learning, just here to basically absorb, right? That I don't have a good handle on because nobody responds to my messages. But in any event, if I had a good feel for the fact that all of you guys are trying hard to be day traders or swing traders or investors, or you're just here to learn, I could really mold these sessions more accurately. In any event, it is 10:06. We are below the pre-market action. I'm going to get rid of that pre-market. This is how we look on 2-minute candles. You can see here we are on these pivot points. I'm on the daily pivot point, I believe, here. Hold on. Yep. Actually, that's a weekly. Well, they're both. They're right on top of each other. Weekly and daily pivot points are sitting right on top of each other. Thank you, Kelly. Thank you. There's the thing about that day trading routine, Kelly. Keep something in mind. All right? If you set out to do a day trade, then do a day trade. Don't let a day trade become a swing trade. Right? What that means is, generally speaking, you'll get into a trade and it goes against you a little bit, and you hold on to that going overnight, right? And then you wake up the next morning and you find out why it started to go against you, and maybe because the news was really horrible, and all of a sudden you're stuck with a real loser. My point is, win, lose, or draw. The primary rule of a day trader is, at the end of the day, you square up your position. Win, lose, or draw. You are out of that trade. To do it any other way basically means you're a short-term investor. You could be a 2-day investor, right? But you're not a day trader. And day trading, one thing that will help you as you're looking at this, that blue sky, room to run, yeah, that's exactly where these this grid thing, not grid thing, but the volume thing comes into play. Very, very useful. Look at the bounce we're getting here off the pivot point. Pivot points are just that. They're mathematically, they're telling you where price should look for support or resistance, right? But like anything else, there's no magic number here. If the market is violent to the downside, it's not going to stop just because of a little blue dot that's in the way, right? Or if it's incredibly resistant above us, you'll see the price action. It'll bounce. It'll keep hitting it. That's why finally, when it does trigger above a pivot point, right? A lot of times, maybe that becomes your trigger to take that trade, right? You, Kelly, one of the things you're going to start doing here is developing a trade plan under, what are your rules of engagement? Are you going to take a trade based on crossovers and moving averages? Are you going to be looking for other signals? I mean, what? Come up with a trade plan. What specifically? And the only way you want to do that, by the way, so that you don't lose money, is paper trade. Whatever you come up with, but paper trade it and see how it works. 1 second. All right, Netflix up 23. Really? There's the weekly candle. This one, you've got an island breakout here. At this point, it's an island. Tomorrow, or even today, if this thing broke above or below the morning range, the morning high or low, you would take the trade accordingly. One second. What you don't want to do is guess, right? Look, even when you arm yourself with as much study and paper trading as you can, all right? Look, the bottom line is you're going to see something in the chart. You're going to say, this is my trigger. Boom, I'm in that trade. And a minute later, the news comes out that something affects that particular stock. That's just the way it goes, right? You have to understand that. I don't know, I'll send you an ebook, right, that'll make you understand, Kelly, that every minute of every day is a new market. Once you learn, appreciate, and learn to live with that, right, and you'll see it in this ebook why that is the case. It makes life a little bit more tolerable. Hold on. Home Depot. Home Depot. Home Depot, it sort of makes sense that Home Depot, actually it doesn't make sense, does it? Well, there are two reasons why Home Depot may be going down. Let's take a look at it here. 1 second, let me use a different grid. Ups. Is Home Depot following lows? Do you track lows along with it? I don't think that's a symbol. Anybody know the symbol to lows offhand? Oh, that is it. Lows, okay. So the home builders are down. Home Depot is not a home builder, but they do derive their business from rebuilding old homes. I would think Home Depot and Lowe's should be a good play for that, what do you call it, hurricane rebuild. Keep your eyes and ears open for that. Meanwhile, though, Home Depot, and by the way, are you speaking of Home Depot as a day trade or a swing trade? As a swing. So look, are we at a support level? We could say that at least going back 9 months. How about 2 years? How about on a weekly? So this thing's been coming down for 1, 2, 3, 4. It's been pretty much tracking the market. The market's been weak for the last 4 weeks. Home Depot's been pushing the way down for the last 4 weeks. One second. Home Depot. Look, you've stair-stepped your way down here. Let's go back a year, I guess. You see your red line here? This is your point of control. This is part of that green line thing, that phenomenon that you're seeing. But that's a very important level. You would expect it to hold, but chart-wise, it doesn't look very good here. One of the things I'm pointing out, or I would point to here. One second. Well, here, your price level broke. That's the first time it broke. Then it stepped down again. Then it stepped down again. And again. And again. And again. Just like on the way up, it stepped up. It stepped up. It stepped up. Bounced around a little bit, then makes its breakout move, trends. Look, from an observation perspective, here's a head and shoulder that basically did not really materialize here. Here's the other shoulder. Did not break that, basically really didn't break that neckline. But it's got issues now. So fundamentally, this thing's got issues. We don't know what that is. I mean, we could check it out, but we don't know for sure. One second. What is interesting about it is, one second. I sort of like the, oops, one second. I like the fact that we're a little oversold. See, we're outside the Bollinger Band. These are weekly candles now, okay? Weekly candles. We are at a relative support area for the 2 weeks right here. There's your support. Let's see what this looks like on the week, on the daily now. Net, you can see here, look, your selling volume on the way down, your selling volume has been increasing as prices coming down. That's not a good sign. If today works out to be, or tomorrow works out to be a bullish day, right, you're going to want to start seeing black columns here, black volume bars, suggesting that buying is overcoming selling volume. At this point, this is still pretty weak. If you're thinking of it for a swing trade, no, I wouldn't touch it now. Well, you said swing trade. I'm assuming you meant swing trade up. Because you can swing trade down. Look, here's your previous low, way down here. But for a swing trade here, you're going to be better off. You're going to wait until tomorrow's price action and see if you can't get an inside candle day, an inside, maybe a harami candle or some little candle inside this previous day. The only thing this thing is going for, I think anyway, price-wise, is the fact it is at support. And then you might look, again, from the high here, this thing's already down. That's down 14%. I mean, that's correction. That 14% is a lot. And then finally, what are the options telling you? See, on the option side here, look, they're trying to be bullish about it. Anything, the PC ratio, anything under 1 is bullish. So they are bullish. You can see it right here. Well, from a swing trade perspective, let's see. I don't know, about 20 cents. I would want a less spread than that. If you're trading options, that spread plus your commission eats up a lot, right? And I mean, at this point, look, here's a 10-cent spread. That's reasonable for a swing trade. Here's a better one. You got a low delta, though. I mean, you probably don't want that kind of delta, but it's only a 3-cent spread. Stock's sitting, that's 10 points away too. You're not going to get 10 points, or at least you wouldn't really expect to get 10 points. I wouldn't think anyway. But you're not playing for those 10 points. What you're playing for is, look, if this stock moves up $1 today, if it moved up $1 full, my option, this particular option right here, right, which is now priced at $1.97, right? If the stock goes up $1 full today, right, my option will increase to $2.23. $2.23. That's how much that one contract would appreciate if the stock moved up $1. You see that, right? You understand that. How to work with your delta. Okay. Meanwhile, so in other words, the spread here is attractive, but the delta sucks. Right? Generally speaking, you might want this delta. Right? The spread sucks. So you have to be patient and wait for the spread to tighten up. And if the spread's tightening up, then it's probably going down. The price action is probably going to be working its way down a little bit. So again, depends how badly you want it. Put some alerts on it, monitor it, and see what comes out. All right, hold on. I got to run here. 1 second. Wait till 2 o'clock. Again, 2 o'clock, even if we're weak, and look, you could see here the VIX, elevating VIX, and we really don't know why. The only thing I could point to here, maybe, is because anticipating that the Fed is going to say, well, no matter what, we're still going to be raising rates, right? And if they say that, that they're still going to see three interest rate moves, then perhaps we pull back, and perhaps we pull back lower than that 50% move of yesterday's candle. Be on the lookout for that. If we close on the SPY under that 50% mark of yesterday's candle, at 50% mark, look, 278.40. You see where I'm pointing to it with my finger here. You can't see my finger though, can you? But look, see right here? If we close, I mean, we'll probably come down here between now and 10:30, quarter to 11. Right? But what's important is how does this thing react at 2 o'clock? Tenuous market again. The market always doesn't matter what you think. The market always finds something to worry about, and it overreacts, and then it finds something to rally about, and it overreacts there. So keep your eye on the VIX, though. I mean, again, I can't point to anything specifically. Is it the banks? The market is just nervous, you know, for lack of a better explanation, a little tenuous going into 2 o'clock hour. Keep your eye on that. All right, guys, we'll see you tomorrow morning. Have a good one.